What's up, everybody? In this video, we're going to be talking about the markets. We're going to be talking about all the different trades that we are in the high five setup strategy. We're going to be talking about the high five setup strategy and individual names. We're going to be talking about where those names are at. Are we getting close to liquidating our positions? What positions did we liquidate? What positions are we focusing on and really putting our focal point and the majority of our positioning in? We're going to be looking at everything, guys. It's been a very, very crazy yesterday, and today's been, what you would expect, a little bit of a follow through, but also, as you can see, we're just kind of having an inside day today. I will say, to start off, phenomenal news. Our GDP quarter over quarter came in at 3.10 when they were forecasting 2.8%. And the prior quarter was 3%. So we even beat by a tenth of just zero point 0.1 percentage points on that as well, quarter over quarter. So this tells me, along with retail sales being 20 basis points over, these things tell me that the economy is good. The economy is strong. The American consumer is strong. And what we're going into tomorrow is at 0830, we're going to be having, PCE come out. And basically, this is the Fed's favorite tool for gauging inflation. And we're expected to have a drop quarter over quarter of 10 basis points. And month over month of 10 basis points. And if we get in line with that, or we get, we beat that number with a 0.18, 0.16 or something, that kind of mirrors, everything, all the other numbers we're looking at, it's going to allow people to say, all right, I call BS on the Fed. And because what the Fed did yesterday was he just came out and he just spewed fear, uncertainty, and doubt. FUD. He just spewed it left and right. Nothing he said was different. Nothing he said was isn't anything we didn't already know. The only thing different was, going from a projection of 4 cuts in 2025 down to 2 cuts in 2025. But at the same time, we have to realize that they're just projections. And we have a new administration coming in, and that's going to tell us a lot about where we're going and what's happening. And if inflation continues to die with a new administration coming in there, then that 2 could bump up to 4, could bump up to 6. Like, it's just a projection to say, this is they're just putting a baseline in there. And like, the overall, his whole speech was just very negative and just very, like, fear. It just was filled with fear, uncertainty, and doubt. And he really tanked the markets. He had a lot of power yesterday, and he used that power to really tank these markets. And I think it's creating a great buying opportunity. So when in doubt, zoom out. And so we're going to look at the monthly charts here. I love the higher the time frame, the higher the probability. And I love looking at the highest time frame, which is the monthly. And then, weekly I trade off of, and then daily, I use to check under the hood and see how the engine's running, right? So as we can see with the QQQ, we've been running up, and we are in an uptrend, right? Obviously, we are in an uptrend. We broke out of this cup and handle pattern. We have this ascending triangle pattern. We broke out of that as well, but we have not realized our measured moves of 560 and 580. And these measured moves are before 2026. So meaning that we should, before 2026 kicks off, really, we should get to 560 or 580 on the Qs. And everything else is kind of aligning with that, right? We're still green on the high five indicator, meaning that we're still in an uptrend. We're still good. The strategy is still good. And not only that, but as you can see back in history, this is the Williams consolidation box. This is my personal strategy. This line and this indicator is the Williams percentage range, the W percentage R. And essentially, the Williams consolidation box is something I created off of the Williams percentage range as a tool to let me try and predict markets to the best of my ability, and just adding another tool to my high five trading strategy. And what do we see? I always say with the box, essentially what the Williams consolidation box is we run up over 20, over negative 20. We run up to the barrier. We get a big, nice pullback. We create support. And then at that point, from right here, we have our box formed. We draw our box out like we did here. And as long as we stay in the confines of this box, you are going to continue on an uptrend. Once you break out of this box, along with the high five indicator going against you, red, then guess what? You're no longer in an uptrend and there's time for a big correction, pullback, or crash. So, where are we now? When in doubt, zoom out. We are still in the box, everybody. And we are actually pretty far off this negative 20, negative 29, negative 30 support. I know we've pulled back a lot in this day, but we've had these pullbacks along the way, and none of them have sent us out of the box. This was the worst one, 3 weeks in a row of about 8%, 5, 6, 7, yeah, about 8.5, 9% here on this pullback, almost a 10% pullback. And guess what? We created our support. So guess what? We would need to get a more than 10% or ish pullback to really sit there and say, yeah, it's time for us to be going down here to create the low five and the downtrend Williams consolidation box. So this is your uptrend up here consolidation box. This is your downtrend Williams consolidation box. And we're not there yet, guys. So when in doubt, zoom out. We're having a nice pullback. It was a crash yesterday, and it sucked, and it wiped out a lot of gains for not only me but for all of you and a lot of other people, right? And it is what it is. You have to take this time, like we're about to discuss. We have to take this time and not get caught up on, where we are at, sitting on our hands and just kind of having hopium. What we need to be doing is saying, all right, yeah, that sucked. We had yesterday, we had last night to really get over it and to say, okay, let's come into the day, a new day, and let's figure out where we want to be. We want to be where the puck is going, not where the puck was just at. Right. So if you watch hockey or play hockey, I personally play hockey, right? Whenever you have whenever you're playing hockey, right, you're moving forward up the ice if you're a forward, and if my guy here has the puck and I'm here, I have to be going here because he's going to pass to me there. I have to be going to where the puck is going. Or if I'm coming back or I'm chasing the puck, I can't be, if the puck's here and then it's going this way, I can't be going here because by the time I get here, the puck is over here. I hope that makes sense. I know not everybody's a hockey fan or a hockey player or whatever, but it it's just about where the puck is going. Going where the markets are going, preparing yourself and establishing yourself and building your portfolio and your trades up and consolidating into the best possible trades. That is heading where that is going to where the puck is going. That is what I mean. Right now, we need to not be sitting on our hands, not crying over some gains we lost or some losses. I know it sucks and I know it hurts, but if you want to be in this game, you got to be able to 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 come back, to bounce back like a rubber band. Like I think this market's going to do. I think it's going to bounce back and we're going to be going in the uptrend. I don't think this is that crash. I could be wrong, and I'll definitely keep you updated. If we break through this and we roll over red, then guess what? We're in a crash and we'll liquidate our positions, but we're up on a lot of stuff. And even if it comes down to that, we're still going to be able to exit with a big win in the overall year. So we just have to react to the markets, but we also have to go where the puck is going and prepare ourselves and prepare our portfolios. Like I'm going to talk about in this video, me consolidating a lot of my positions to the best positions, to my highest convictions, to the best looking trades. And that's what I'm really doing. If we look at the SPY, it's the same thing, guys. We were running into the red barrier and we needed this pullback on the monthly. But again, we're in the Williams consolidation box. We are continuing on an uptrend. Case in point. That's it. That's it. That's all you need to know. Now, on the IWM, it is very different. We are breaking down, right? But what I will say to that is we have this giant cup and handle, and we are right back at this point, right at this volume shelf. We are right in the area where a retest and a bounce is very, very likely. Look, I'll be the first to tell you guys. I was sitting here and I put these levels out here, 238, 234-ish, 66-ish. 228. Look, I had these levels based off what I was seeing, and I sat there and I said, I think we're continuing higher. Our weekly and our monthly look good, and we were still in our Williams consolidation box. We were on the floor on the daily, as you see. We were on the floor here, and I'm no oracle. I'm not perfect. I didn't put a lot of money on this, and in my TNA options, there was a very small amount. Like I said, I wasn't playing this as a big old, like high five trade or anything. I was just sitting here saying, I'm going to put a little bit of my money where my mouth is because I think we're going to get this bounce. And I still do think we're going to get this bounce. We have all this consolidation, all this previous support and resistance. We're at this big, nice volume shelf. We had this big pullback. We're on the bottom of the Williams R percentage off the bounce line. We're just consolidating here. And I do think we're going to get this bounce up. It might not be till January, February. I don't know. But all I do know is that I'm positioned in my trades for the long term. I play the long term and I play swing trades, more long than swings. You all know that if you follow me long enough, right? So, people are coming at me for being wrong on IWM and where we were going to bounce and stuff. And all I got to say is cool. Like, I'm still way up on the year and it is what it is. Like, you're not going to hurt my feelings. I was wrong on IWM. But guess what? Nobody could predict what happened yesterday. Yesterday was one of those events that nobody could predict. I don't if they telling you that they saw it coming, that they knew what was going to happen yesterday, they're full of crap. They're full of crap, and it's just this like you shouldn't follow someone like that. I will be the person that will always say when I'm wrong and when I'm right. Right? I have losing trades, Celsius, SMCI, in mode that we'll get into, Micron, Shopify wasn't a loss, but it was I exited. I'm currently down on TNA. I'm currently down on Mara. Haven't exited that yet. But we're gonna get into all that. It's gonna be a longer video, but it's gonna be, I think, worthwhile to give you an update on everything. And yeah, guys, I'm wrong, but guess what? Also, my TNA options are for the end of January. So, Trump's going to be in office, and you never know when the IWM runs, it runs big. This one week was a 9% week, right? So this was a combination of like a 10% week down, but in one week you get it all back, and then we could, be pushing all time highs again. So these do bounce quick, but again, you just got to zoom out, right? This Williams R does not look good. We are turning red on the IWM, but big but, right? We are at the floor on this name. And meanwhile, the QQQ Inspire still good in my eyes for a bounce and continuation higher. And I don't believe, like in my previous post, I don't believe Fed Chair Powell said anything to really derail this market besides putting fear, uncertainty, and doubt. And what have we had since then? We had GDP numbers that absolutely crushed estimates. And we were talking about 30 basis points higher than what they were predicting quarter over quarter, and they were 10 basis points over the previous quarter. That's very bullish. Retail sales 20% or 20 basis points over month over month, so that's increasing. Great holiday quarter, and then we're projected to be coming down on PCE here. And I'll tell you about the Trump administration. They're going to be all about business. They're going to be all about you know creating an economy that's thriving. And Trump's going to want lower interest rates. He's going to want low inflation, and he's just going to want a small business and business-esque economy to really thrive. So knowing that, I can sit here and say, yeah, we're breaking down out of this, and we could definitely fall off this cliff and go way down, right? But a couple things, what I just told you with the new administration coming in, it's very bullish for small caps. You saw what happened to small caps in 2016. They ran like crazy under Trump. Also, we're on the floor. Also, the overall markets, the QQQ and the SPY, they're not there yet on like, falling out the Williams consolidation box and potentially crashing. And the overall economy is still good. TLT and the 10-year and 20-year and 2 year, they're all jacked up right now, but that can change very quickly in 2025 into the new year, everybody. So we just got to be patient. I was saying it the whole time. Again, I was wrong on my levels, like, and that's okay. But at the same time, it's only been a week or two since I predicted all this stuff and I was saying all this. I'm a long-term investor again. Like, don't judge me on where we're at right now. This is price action. Judge me on where we are in a month, 2 months, 6 months. You know what I'm saying? Because at the end of the day, if we go to 306 like we're pegged to on this measured move of this cup and handle, if we go to 306 but in the first quarter of 2025, nobody's going to sit here and say, "Oh my god, well you were wrong here." Well, okay, I was wrong here, but I have a lot of small cap positions, individual stocks that I really like the setup for, and now they're all higher because we ran to 306 on the IWM. So you can sit here and say I'm wrong now, but will I be wrong in 6 months, 3 months? You see what I'm saying? Like, I'm a long-term investor, so again, I'll say I was wrong on me thinking there was a bounce and everything, but you got to give me a little bit of grace because nobody saw what was coming yesterday. Nobody at all. And I've been very accurate to this point on my trades, on predicting the markets, on saying, pullbacks on QQQ, bounces on QQQ. You know what I mean? So judge me on my overall performance, not on one individual thing. Okay. Because I know my strategy works. I'm very confident in my strategy. And trust me, I wouldn't be up. I was over 200% now because of the big pullback. I'm up about 180, 190% on the year. I know it's a bull year, but I didn't sit here and lose all my gains in 1 week in the last couple weeks of the year. So my strategy works, guys. I'm still up almost 200% on the year. So I know it hurts. Trust me, it doesn't feel good to lose a couple 100,000 in 2 days. I understand that. I'm with you. I showed you I was with you, but we have to take a step back. We have to look at the overall markets on the monthly, on the overall trend, and say we're still good. And like I said, I do believe that we will have a Santa Claus rally next week, especially if we get PCE below or in line tomorrow, because people are going to start calling Fed Powell's bluff. His bluff being him talking all this negativity and everybody seeing the numbers that don't align with the FUD that he's putting out and saying, nah, you're going to cut. You're going to cut more next year. Trump's going to be pushing you hard about it. And to really believe that the president and the administration doesn't really have pull or can't manufacture ways to get inflation down or X, Y, or Z is very wishful thinking, everybody. That is not how this all works, in my personal opinion. But you can believe what you want and think it's a standalone, which it is. Trump can't just go in there and fire him or tell him to do something, but you can definitely manufacture or put pressure on the Fed to do these things like we saw back in 2016, 2018, during Trump administration and 2020. What the pressure they put on the Fed, not through yelling at him, but through making the economy better, inflation's down, just manufacturing it in different ways, everybody. So just a little gem drop there. But also Bitcoin, I think it's holding right where it needs to hold. There's 2 boxes here because it's a weekly, but look at this. Guess what? We're still in our Williams consolidation box, meaning we're still in an uptrend, and we still need to get to our 110-ish and 128-ish price targets for our measured moves. So not only that, our Ethereum at the same time, we'll get into Ethereum in a minute, but it's the same thing, right? So we're still in an uptrend on the monthly, and the monthly dominates all other time frames. Until you get that monthly saying, hey, the uptrend's over, we're done, then we're not done. We're not. TLT, it doesn't look good. I'll just be honest. It does not look good. We're off the volume shelf and we're down here. But what I will say is a weekly candle, and again, if we have good PCE tomorrow, we could see a wick back up. Or what can happen with these uptrends and with these, sometimes next week, if we get a Santa Claus rally, guess what this is going to be? This is going to be a liquidity grab and an undercut of the uptrend. And then we could be right back up here next week or into January. And then we're back up here. And if we're up here in first quarter, second quarter of 2025, you're really going to care about this undercut. No, you're not. So again, I'm not trying to paint things in any way. I'm just showing you what I'm seeing on the charts and what I truly believe. This could be an undercut. It could not be an undercut. We could fall off a cliff and the whole market could crash, but I'm not seeing that. Let's go to the VIX. I made a post about the VIX yesterday. This one day, or sorry, let's go to the daily. This one day of almost 74% pop on the VIX, which is your volatility index, that was more than back in August. Back in August, when we had this massive Japanese trade crisis going on. So, are we going to sit here and say Fed Powell saying some negative things and putting FUD in the market, and the only thing that changed is 2 cuts, potentially projection over 4 cuts, when everybody already knew all these things, everybody already knew where inflation was like at, kind of running sideways. So we're going to sit here and we're going to say that this 74% VIX spike yesterday was bigger than the Japanese trade crisis, where we plummeted on that Black Monday, they called it. Are we really going to say that? I don't buy that. I don't buy that one bit. I think the Japanese trade was way more scary, and it could have been way more devastating to the markets than FUD saying some negative things and putting FUD out there. I think I just said FUD thing. The Fed saying negative things and putting FUD out there, guys. You make your own accusations, own assumptions and stuff, but this is where I see the markets. The economy's good. The Fed said the economy's good. The Fed said the economy is continuing to go up. I'm not buying this pullback. I think it's a giant shake of the tree, like I continue to say. I think we were getting frothy in some names. I think we were getting frothy in some small cap names. I still think small caps have a lot of room to catch up, and they'll do good in 2025 under a Trump administration. But at the end of the day, it was getting frothy in crypto land. People were getting gambly again, like in 2021. I don't think this is a crash like that, but I do believe that this is one of those big shakes of the tree to get those newbie investors or new people coming in, the gamblers, the degens, kind of get them out of the markets and shake them loose. Also, you have tax loss harvesting season right now, and you have a lot of people sitting on a lot of gains for this year going into the new year, not wanting to sell until January. So I also think this this brings a lot of indicators down, drops the RSI, brings us into a nice stable environment, get this beautiful little pullback before we go into the new year running basically overheating our car. If we would have kept going higher and had a Santa Claus rally into the new year, the car would have been overheating at that point. And then on top of that, you would have had everybody going to sell a lot of their gains. That way they have a year and a half without having to pay taxes on them. And you have this whole run to sell gains. So this giant snapback of a pullback caused so many people to sell those gains and pay taxes on them this year, and also tax loss harvest faster or right now before the end of the year. So you had tax loss harvesting, then you had people taking gains because they didn't want to lose all those gains when we were crashing yesterday. And guess what? It paints a better picture going into January. It paints a better picture moving into 2025, where you're not going to have this giant snowball rolling down the hill about to smack everybody in the face as soon as January 1st opens up and everybody's running to sell their stocks. A lot of people sold. A lot of people sold. And if they didn't, at this point, when we move into January, yeah, there might be some more selling pressure, but at the end of the day, it's not going to be what it was going to be. And then we can continue our uptrend. We can continue in this bullish market, and I think this bull market still has more to run. We haven't caught up on this on the small caps. The small caps haven't caught up to the QQQ or the SPY, and they're lagging behind. And typically, at the end of the bull market, you have the small caps running and at least catching up to the SPY before you have that top and then a crash. Also, we know that a lot of big cap and mega and mag 7 names, they're not overpriced. If we look at Meta or Google, they have like a 20 some PE, their forward PEs low 20s. As soon as we push into 2025, Nvidia's forward PE is going to be 27 for how they're growing, and the production and how everybody's going to be building out these data centers and everything, and how well Blackwell is going to sell through. I mean, we got to look at the bigger picture, guys. We can't just look at one day. And if you look at that one day and you sit here and you tell me with a straight face that what what Chair Powell was saying was more than just fear, uncertainty, and doubt. Well, you show me the fact. You break down what he said. You break down what he said. Or show me in the numbers. Show me in the numbers that inflation is getting out of control again. It's not. Show me in the numbers that the economy is showing cracks. The economy is in a bad place. It's not. Even Chair Powell said that the economy is really good right now. And inflation's still coming down. It's still pegged to come down. We're not getting out of control on unemployment. Unemployment staying down or coming down from what it was at just a couple months ago. So you can't show me in the numbers that what he was saying yesterday lines up with some kind of crash or like some really big recession or anything. And he even said that we avoided a recession. So why'd the crash happen? Just a big old overreaction to him being negative. All he was saying was putting fear, uncertainty, and doubt out there, everybody. He was putting that out there by scaring everybody with inflation. Everything he was talking about was inflation. And then when he was asked about if he was going to cut rates, he said no. Or sorry, if he was going to possibly raise rates, and he basically said no, but I mean, he can't say no. Like he has to no. He has to basically paint the picture as like he can never jam himself up. He has to always be willing to move with the data that's coming in. But none of the data is slated or projected to get out of control to where they would have to start raising rates again. But it puts fear, uncertainty, and doubt out there that they're thinking about they're talking about cutting rates from 4 to, or they projected rates to be cut from 4 to 2, and they're thinking about or putting out there and talking about inflation maybe possibly getting out of control again, or it's a possibility and stuff. And it's just FUD. It's just FUD. That's, I mean, seriously. I mean, go listen to it again and try to pick out concrete things that are actually really bad for the market. And it's just, there's nothing concrete. It's just words. It's just FUD. I'll be done talking about that. Those are my honest opinions. I could be wrong. But I don't think I am, guys. I don't think I am. I don't think this bull market's over. I see it in the charts overall. Like, I think we're still good. And that's on the monthly, and we're zooming out there. If we pull down to the weekly, we have, if we close this back up, right? We have pulled out of the Williams consolidation box, but we're right at our level 3. We already retested this ascending triangle pattern. We are still above the 9 EMA. We are still green on the high 5 indicator. So if we look back, this was a little flash crash back in September. This was a little consolidation pullback. This was a little 3.5, almost 4%. We actually predicted that pullback, and then this bounce back in November. And then this could be the same thing, guys. It could just be with these one-off weeks that are bad, and then we're right back going higher. If we truly do continue to pull back, I think we would pull back to about, around 500-ish, maybe down to 490 to 505-ish, somewhere basically in here if we continue to pull back. And that would probably bring us down here. And then once we bounce, we would come back up here and regain and reestablish a box. If we pull down here, I think there is room on the monthly to allow for that pullback and allow for us not to have this big crash. I think we still could hold this because I believe that would be right around a 10%. So we'll be right at the bottom of this before we bounce. And again, if it's a 5% or a 10%, you buy the dip. And if we continue the bull market, you're going to be really happy you bought the dip, either as a trader or as an investor. Because guess what? If you buy the dip in here, and then first quarter, second quarter of 2025, where we get up to 560, 580, you're going to have a lot of gains. You're not going to have to pay tax on them for a very long time. Same thing in the SPY. The SPY really came down, and we're really outside this box. And we're down here at 586. I think there's a gap in here somewhere to fill. Yeah, there's a gap right here at 570.52. Whoops. Let's delete that. Right here, as you can see, there's this gap, and also there's a retest. The retest basically here of our symmetrical triangle pattern right here around 575, and this gap is 570. So 570 to 580 we could pull down to. But again, on the monthly, I don't think that we crack this support. So again, we got to look at everything, right? But at the same time, look what happened here. We pulled down here with this, and then we snap right back in. We pulled down here like this, and then we snap right back in, snap right back in. We could do the same. Again, I care about the weekly, but if the monthly is telling me we were still in a bull market, I care more about that. Trading wise, I'm not looking at monthlies. Trading wise on these individual stocks, I'm looking at weeklies, and I will exit if we were breaking out of consolidation boxes and getting a red indicator. Okay. So I think I spent enough time on the markets. I was like 30 minutes. Let's move into the trades. Actually, you know what? I'm just gonna put this video out, and then I'll make a video about all the trades that we're currently in and how I consolidated them and all that. I think it's better for me to separate these videos because this is already a long one. So this is gonna be a completely just about the markets and where I think we're going, and yeah. So I'm gonna post this video, guys, and then stay tuned for the trades video.